Rabobank, Anish from BlackBull Markets here. Today we saw US jobless claims come out. Nearly 1 million people filing for unemployment benefits weekend in 9th of January. That was up from the expectations of 780,000 that were expected to file. Ahead of that, we had some comments from Jerome Powell, which didn't help the recent dollar recovery that we've seen throughout the course of the week. Markets still somewhat remain sideways, but we've caught something here that has likened my interest, and that's the Aussie dollar. Now, throughout the course of late last year, we saw a rise in the Australian dollar against the US dollar, partially due to that significant dollar weakness, but more so that the Aussie is a commodity-linked currency and also risk-on, representing a nice appetite for bulls to get involved in, especially if they're selling the US dollar, looking for another currency to perhaps rebalance their sheets with. Now, the Aussie dollar overall, we've been looking at an 80-cent target, and we're more so making a claim to come and attack 80 cents. Bulls are that is very soon, and we can see that today. Appetite to keep buying the Aussie dollar above that key resistance. This is a 15-minute time frame. You can see the price action following that jobless claims data that we saw, breaking that recent high of 77.90, going up to test 78 cents where we got a rejection from there. But let me show you the 4-hour time frame, which does show you a possible scenario of the Australian dollar breaking above the 78 cent mark. So what we can see is we've recently developed this double bottom structure here ever since the year started. So of course all of these troughs represented those dollar recovery modes. It's really been driven by this trade, in my opinion, and as well as the Australian dollar being risk on. So what we saw was, of course, that double bottom trade, a nice trend line break as well recently with that 4-hour candle that we saw earlier on in the session, which does for me indicate a possible move back up above 78 cent. We could well see markets come back and retest the trend line with a view of taking that higher. But if we look on a weekly time frame, we can see there's probably not much stopping it if we do hit break 78 cents to head higher. Of course, 78 cents being another key high from 2016, where we caught some resistance, so it could well place as another key resistance area. So the idea is, look, a break of 78 cents brings us into a new trading range that we operated in around 2017, and that went all the way up to 81.41 cents. So you're really looking at another 200 to 300 pips to the upside for appetite for bulls. And let's see if we can get into that consolidation area. That is key. If we get into that consolidation area, that could really mark how things will play out for this year. So do stay in tune with this Australian dollar move. Of course, it's been extremely bullish. Weekly time frame, you can see not much in the range of stopping those weekly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 consecutive weeks of green candles ever since September 2020. So trends to the upside. Trend is your friend, of course. That is not set to change in 2021. So thank you for tuning in. All the best of luck with your trading.